Hello everyone, my name is Easy Young FX and you're welcome to my YouTube channel. Today I'll be talking about the market structure and I'll be showing you how the market structure works on the Forex charts. So before we dive in, we'll have to talk about the market structure. Let's see what the market structure means. The market structure. So the market structure means the market structure refers to how price moves in the market, creating trends, ranges, and key levels that traders use to predict future price movements. Understanding market structure helps traders identify entry and exit points, trend direction, and potential reversals. So the market structure shows us, the traders, where to make our entry, where to exit our the trade. It shows us the trend direction. It shows us if the trend is on a long term, if the trend is on the short term. It shows us if it's an uptrend. It shows us if it's a downtrend, and it shows us potential reversals. So what makes up the Forex charts is the market structure. It's like the structure of the market tells you how the market is being formed. It tells you the starting point and the ending point of a trade. So let's look at the components of market structure. Then we'll go back to the previous line charts where I will break down everything for you, where you see how the uptrend is being formed, how the downtrend is being formed, and we'll have our consolidation trend also. So here's the components of the market structure. We have the trend. So what makes up the trend? We have the long, which is also called the buy trend. We have the short, which is also called the sell trend. And also lastly, we have the consolidation. You can call it the sideways and the range trend. So before we dive into the line charts, where I'll be showing you an example, which after then we'll go into the main charts and check out, or check each of this trend out. So I'm going to explain each of these trend for you now. So the long and buy trend, it's a bullish trend. So when we say bullish, it means that the market is on a buy. So when we say bearish, it means that the market is on a sell. So when we see a long trend, what are we going to be looking for? We're supposed to be looking for what? Buy entries. We are supposed to be looking for buy entries. It is advisable for you not to trade against the trend. So if you are checking out USD, for example, or whatever currency you are trading, and if the trend is on a long term, if the trend is on long, what are you going to do? Look for buy entries. Then if the trend is on sell, you are going to look for what? Short entries. You are going to look for sell entries, right? So this is a benefit of the market structure. It shows us the trend of the market. It shows us whether we are long or whether we are short. So now the last one here is the consolidation market. So the consolidation trend is a scenario where there is no trend for a buy, there's no trend for a sell. It's a sideways trend. It's a trend of indecision, where you don't have decision to make if it's going to break up or it's going to break down. You don't know if it's going to continue up or it's going to continue down. So without wasting much time, let's dive into the first image I showed you, where we have the line chart, where we have everything displayed there. So as you can see on my screen, we have the uptrend, we have the downtrend, and we have the consolidation trend. So these are what makes up the market structure. So now let's start with the uptrend here. So the uptrend here, you can see that it has a series of highs and a series of lows, right? The HH stands for the higher high and the HL stands for the higher low. So firstly, when you come to an uptrend, the first thing you see here to identify an uptrend, you see it creating a high. Then what happened again? Going to create another high, which we call the higher high, breaking this previous high to create another high, and failing to break this low, right? Failing to break this low to create another higher low. Now if you see something like this in the market, you will know that, oh, it's on the buy run, right? So you will see, oh, it's on the buy trend, especially when you check the higher time frame. You use your higher time frame to know a trend of the market. You from 4 hours and above can tell you the trend of the market. So now if you see this, now you see that it broke the previous high, breaking another high here again, creating what, a new higher low, then breaking the previous high to create another high. So basically this is how to identify an uptrend. So something like this also occurs in the market, where you see it creates a low, higher low, right? Then went up a little bit, but right, came down to take probably a point of interest. It could be a demand on or fair value gap around there. And what, so if you don't know what mean of fair value gap or point of interest, which point of interest can be your fair value gap, your demand zone, supply zone, I will talk about those ones. So I will drop videos on that. So if you want me to if you also want me to talk about anything, just drop on the comment section and I'll talk about any topic you want me to talk about. So basically you can see what happened here, and it broke the previous high. And what happened here, basically what happened here, when it created the low, it went up, failed towards break this high, right? So a lot of traders now may see this and say, oh, it's going to sell, but without confirmation they will short here and end up with being stopped out with an SL around there. So now what happened here, price came down to sweep liquidity and will take a point of interest and goes up. If you don't know what liquidity is, keep on checking my video, because I'll post on liquidity. I'll post basically on smart money concept. I'm a smart money SMC trader, so just follow me up, subscribe, and you'll see more videos on that. So yeah, basically it's an uptrend. So you can see how an uptrend looks like. So let's go to the downtrend. A downtrend is just the opposite of the uptrend. Now a downtrend creates a series of what, lower highs and what, lower lows, right? So firstly we have the lower high, then what happened here, it broke this this lower low here, right? Then when it went up, it failed to break this previous lower high, creating another lower high, right? Creating another lower high, then went down rather. Then what happened here, went up again to create a lower high and went down. So basically if you see this kind of thing in the markets, what will you do? You be looking for a short, right? Because you have to trade according to the trend of the markets. So let's go to consolidation. Consolidation, like I said earlier, is an area whereby there is no decision to make. It's an indecision market whereby the buyers and the sellers are actually fighting for the price. So we don't know if it's going to break up, we don't know if it's going to come down. So we might see something like this now. We don't know if it's going to go up, and we don't know if it's going to go down. So it's an indecision area. It can just keep on doing like this. All right, so it's good to stay out from consolidation market. So when you say a ranging market, stay off, stay clear, do not trade it. So now a lot of technical traders take advantage of the consolidation markets, whereby they trade the support and resistance. So if you put your support area here, I will talk about support and resistance also in this channel. So keep watching, subscribe, turn on your notification button, and expect more of my videos. So as you can see here, the sellers could just take an entry from here and tap into here to take their profit. Same here. So you can see how a lot of technical traders will be taking their trades. So their SL could just be above this resistance area, SL, then for those, sorry about that. So you can see that a lot of people, a lot of technical traders can just take advantage of this place here. So a lot of people will take advantage. So the buyers now will just put their SL around there, right? So for they are in. So this is the uptrend, the downtrend, consolidation trend on the line chart. So let's dive into the main chart. So let's try and identify all these stuff by ourselves and see how we'll be able to draw them and identify trends. So this is the Great Britain's bounce against the Japanese yen, the GBP JPY, and I'm on the 4 hours time frame on this chart. So now let's try and identify our sell trend here. So it's, and also I want you all to know that after learning this, go and backtest them. Go on your charts, try and identify trends on your own. This will help you a lot. So do a lot of backtesting on it. Alright, now let's draw out our sell trend. And the sell trend has what? The series of lower lows and the lower highs, right? So now let's point here as what? This will be lower high, right? Then okay, let's point here as what? Our what? Lower low, lower low. So basically it's good to know how to identify trends in the market, so when you are trading it won't be hard for you. So that's the word, lower low. That's another lower low, right? Then this is, let's mark here as what? Our what? Lower high. Then mark here as what? Your lower high, right? Then here will be what? Your lower low, right? Then here will be what? Your here will be your what? Lower high rather. So now you can see that this is actually a trend in what? The 4 hours time frame. So basically if you tend to enter this market around there, we'll be making a lot of money, right? Here making a lot of money. So because this is a downtrend, so this is a 4 hours time frame, and we have the series of lows as we're seeing. We have the series of high. Because of time, I actually wanted to label them, but I guess we can do that already. But for those, okay, let me just do this. Let me just label it as, let me just label just one each. So this is what our what? Lower high. Then this is what? Our lower low, right? So just for those of us that didn't get it, so we can see that this is our lower high and this is our lower low. So this will also be our lower high, then lower low, and around there was the points of reversal. So about the reversal, I will have a video on that, on how to trade reversal. So just subscribe to my YouTube channel. Remember, follow up my videos. So let's go and look for, okay, let's look for okay, let's do this. So this is a buy trend, right? So after this sell trend, what happened here was a buy trend. After this sell trend was a buy trend. So how can we mark this? How can we label this? How can we mark this? How can we mark this? So here here's what. So here will be your higher higher low, right? Then higher high, right? Oh my god, sorry for that. Then we can mark it as what, another high, right? Your higher high. So you can see how easy it is to mark them out, because when you try to identify the lows and when you try to identify the highs of the market, it will be very easy for you. So this basically is another low, right? This is another low that we can see here. Then this is another low, and which is what, your higher low, right? Higher low and your higher highs. Okay, there's another high here, so let's mark this one first. So this is another high, this is another high. So okay, I think I'm having a little bit of network, so but sorry about that. So we already know that this is our lower high and this is our lower low for the what, sell trend, and for the uptrend here will be what, our higher high. Then here will be our what, lower, our what, our higher low, right? Then here will be what, higher high, lower low, higher low, then higher high, lower, higher low. Then so here was another point, here was the point of reversal. So I'll teach you about reversals and we'll know about that. So I think my network is, let me see, my network is back. Sorry about the network. So let's dive into the consolidation part, which is our ranging market, and let's see how it is. I have drawn out the consolidation part already. So you can see what happened here. This is a consolidation area. So when you check it on a higher time frame, you see how price was ranging. When you check it on a lower time frame, you see how price was ranging in this area. So let's see it in 1 hour time frame. So this is the 1 hour time frame. You can see how price consolidated in this place. This is a ranging market. So this is a ranging market. So what happened here? There was a series of, just like technical traders actually took advantage of this consolidation, where they bought, sold, bought, sold, bought. It's very risky for you to trade consolidation because price can either go either ways, because it's just take away out from consultation. Okay, but what happened here when price went up? It came down to what, sweep liquidity. So teaching you liquidity, for those who don't know about liquidity, came down to sweep liquidity and look for what, a point of interest. And this was a sweet trade, and this trade is about one, just 1:5. So this trade is just 1:5. You can see it's a very sweet trade. So, and it's also happened here, price came down, swept out liquidities here and tap into point of interest. And what went up straight to TP. Here would be my TP if I'm to take this trade. Here would be my TP. So um so that's all about the trend. So pretty sure that right now you know how to identify the trend in the market, the uptrend, the downtrend, and the consolidation trend. So thank you very much for your time. Do well to like, comment, and let me know any topic that you want me to talk about. And also subscribe.